Good morning, everybody. Welcome to the Flow Show. It's Tuesday, and off we go on a busy central bank week once again. Morning, Kay. Morning, Stel.
Good morning, good morning, everybody.
God save the
How you
king.
doing, guys?
Good. And you?
Yeah, all good, all good. Nice reflective family day yesterday. Nice
Did you actually go to the procession and all that? Did you, or did you watch it on TV?
A few of my friends did the went up to see the coffin. Going through 14-hour queues, 12-hour queues. I couldn't be doing with all that. I wish I had gone out for the procession though, because that was something to behold on telly.
Yeah.
Amazing day out. Must have been some great atmosphere there. But we watched it. We had it on the telly. Kids were off their computers. We had a nice, family day. Played some board games and had a nice dinner and. Yeah, had a nice reflective day. So yeah, but quite emotional. Same for you, Kay?
Yeah, even being non-British, Mrs. glued in front of the screen the whole day from the start till the finish, and I took a good few hours as well. It was really amazing and really impressive, very emotional as well. Not your everyday lady, that's for sure.
That's right. Did you manage to see any of it, Stel, or you're too busy?
Yeah, I caught some of it on YouTube and videos and stuff like that. Yeah, I mean, it was if anything, she was consistent and did her job, which is more than most people do.
Yeah, she would have made a good trader being consistent. That's for sure.
Absolutely, yeah. Anyway,
right,
let's see what Charles does now.
Yeah, exactly. Oh, I can't wait. We shall see. So let's get stuck right into it then. Where should we start? Let's start with China, as we often do, that side of the globe. Not too much out from those guys that I could pick up. Obviously doing a bit of scrambling around to catch up on everything that went on the weekend and yesterday. One thing from the leader Xi said that he apparently has told his military he wants the capability to take control of Taiwan by force by 2027. So a little bit of let's call it gamesmanship there, threats to everyone about what he wants to do by 2027. So we're talking 4.5 years in the future. So it's pretty much throwing some comments out for everyone to contemplate on, more than an exact threat, if you get my drift.
Well, it sounds
either way, it's a threat nonetheless.
Sounds pretty threatening to me. Yeah, I was going to say. Sounds pretty threatening to me.
Yeah, it does. To say but I think giving it a 5-year timeline or 4.5-year timeline. I mean, if he was that serious, he'd say he's going to do it next week. If he really wanted to threaten or say they have the capability to do it next week. So I think it's a little bit of a nudge to everyone to say, watch what you're doing. One eye on the Ukraine situation as well. But we know there's increased drills and tensions around Taiwan. Everyone doing military drills and whatnot. So it's a threat, but I think the timeline thing softens it a touch. What do you make of that, Kat?
I mean, it came out even before the weekend, right? It's all part of those meetings that they had, because in parallel with the Asian or whatever meetings that they had where Putin, Erdogan, and Xi met, that is something that came out of this SCO meeting on the side, which was a lot more threatening than the main meetings could have let filter through. So I mean, it's still not a bright outlook, but it's gonna keep people on their toes at least for the years to come. And I think in October somewhere they have their Chinese Communist Party meetings where he's try and get his lifetime premiership sealed. Not premiership, presidentship sealed. So a lot is in preparation of all this stuff. But I mean, it's for sure not a really bright outlook. Yeah.
No, but nothing that the market's really jumped on and got its knickers in a twist over, and that's the main thing as far as we're concerned trading it. Over to the PBOC, and they left their LPR rates unchanged as expected. No change there to some of their minor rates there. We still keep an eye on the big one, the RRR, reserve requirement ratio level, to see if they decide to cut there. That would be a step up in the easing from those guys. Moving over to Japan, I won't mention the fix, the PBOC fix, still a bit of a chasing on that one, not really sitting anything that gives us an idea that they're trying to control anything at the moment as far as the one goes. So I'm only keeping half an eye on those fixes. Yet to Japan, there was a junior coalition, or head of the junior coalition ruling party, saying that they're also watching the yen for its effect on households and businesses. So this is one of the other parties in Kishida's government. We also got data out overnight, CPI data, quite interesting, continuing its uptick. The national core CPI 2.8, beating expectations and above the 2.4 prior. National CPI into 3%. So some additional pressure for the Bank of Japan going into their meeting this week. They're not expected to change anything, but we are now looking for potential signs of changes in language. Maybe, I think at the very least, they may start to pay a bit more lip service to inflation. They're looking for inflation to pretty much get embedded or be stabilized at higher levels before they think about acting or considering tightening. One of their metrics is they want to see, wages growing. At the moment, they're still in camp transitory, pretty much with inflation, but as we see from the numbers, it's going up. It's been going up for a couple of months now, a few months now. It's not showing any signs of going down. 2 months becomes 6 months, 6 months becomes 8 months, that sort of thing. It's how long is a piece of string before they maybe need to turn their language around. Will they mention something in this meeting coming up? Who knows? But the risk grows from this point. What do you make of that, Kay? The CPI numbers there, certainly not going backwards, more a bit of a catch up with what we're seeing elsewhere.
Yeah. So far, Kuroda has always been saying that it's going to be transitory, and there are some demographic and other factors such as wages who prevent Japanese CPI from really exploding. But yeah, it's a 50-50 call whether they are going to say something, try to influence perhaps the market perception of the guidance a little bit. The BOJ watchers on the ground are saying that it's going to take 6 months of above 2% prints for the Bank of Japan to really start to change anything, perhaps to YCC or what else. But it is for sure that if they want to get out of the trap, the window might be closing soon, or has never been as open as it is now. So I'm gonna go into the Bank of Japan meeting this week saying, like, okay, I don't think they are going to change much to their actual monetary policy, but we may have a bit of word change, a bit of transitory left out somewhere here and there. And then the big question is, and which they should not, but the big question is, will they talk about the yen level? And they shouldn't really, because it's not really in their mandate. But are they going to have had enough pressure from everywhere to talk about the yen level? So for sure, it's going to be an interesting meeting this week.
Yeah, definitely. One to keep an eye on there. While we're on the data, we'll have a quick look through there. German PPI out earlier, definitely not pulling back any significantly. Year on year, up to 45.8%. Month on month, 7.9%. So anyone trying to think of peak inflation coming for the Eurozone is going to be waiting a long time. I think this is set to continue, and hence why the ECB are potentially going to be turning more hawkish. They said they're going to do more hikes. So let's see what's in the bag from them. Speaking of central banks, we had the Riksbanks doing the old go big or go home. They were expected to hike 75 pips, and they went the big 100 with comments that they expect to continue raising over the months ahead. They also see the neutral rate, or their neutral rate, in the 2.5 to 4% area, but likely towards the lower end of that number. So they're currently at 1.75%, so plenty of room to go there. They're taking the same line. Rate decisions will be meeting by meeting, data dependent, so on and so forth. Bit of a move in Swedish pairs going on there, but Kate, it hasn't really lasted, has it?
No, absolutely not. The market really took it as a front loading, and really some stops probably triggered below prior lows, but then it really reversed in a minute time, really. It went stocky, rallied a percent, and then now it's lower than it was before.
Yeah, as we see there, threatening to make new highs straight after central bank tightening. That's the state of play we're in at the moment, aren't we?
Yeah. I was a bit surprised about the 100 BPs, but then straight away they were like downplaying and saying going meeting by meeting, and we have to know that Riksbank likes to play. Hang on a minute. We have to know that Riksbank likes to play games, and well, I mean, at least their commentators, they're never giving anything like 100% this or 100% the other way around, and the market got a bit confused, I think. So the big saloon door there on the Swedish corner over the data and over the meeting. I'm staying out of it. I haven't got a clue what's going to happen with the stocky right here and now.
Yeah, and it just goes to show, you think you'd expect the currency to go one way on a big hike like that. It did, but it hasn't lasted. And just as we're watching the screen, off to new highs. Dollar SEK is going for the day. So it's a similar situation to look at for pretty much all central banks, including the Fed. The old buy the rumor, sell fact, or sell rumor, buy fact, whichever which way you want to look at it. And that's what we're going to have with a lot of these central banks. Speaking of central banks, just to give you a quick rundown of what's to come. Obviously, tomorrow is the FOMC, but Thursday is fairly big because we've got the Bank of Japan, BOE, SMB, Norges, and that's it, I think. BOJ, SMB, BOE, Norges, and the South African bank, SARB, which is always a good one to watch for entertainment value. The governor there, his press conference is quite an entertaining, wild character. He is, isn't he, Kay?
Yeah, he's the best clown out there. He's always very lively. He's kind of shouting to his audience. It's always a very funny watch.
Yeah. And just to give you a highlight, what's going on in the expectations for some of the major central banks there. These are the rate probabilities, and they're derived from various methods, either overnight index swaps, various other metrics. But this is from Reuters, and they give an idea of the probability based on where rates are lying. So you can see there, for the Fed, for a 75 pip hike is a 79% chance, 100 pip hike 21%. Bank of Japan, it's a 94.3% chance they do nothing, such as expectations there. For the BOE, it's 75% that they go 75 pips, 24, just under 25% they go 50. And as you can see there, the expectations for the S&B as well, jumping their rate up 75 pips to 1. Going by 1 on their rate hike there. 100 BPs expected from them. As I say, these are not something you put your hat on and trade exclusively, but it just gives you an idea where the market tends to be leaning to. For example, for the Bank of England, apparently traders are pricing in 275 pip hikes into the end of the year. Now, if we're getting one now, it means I think we've got 2, possibly 3 more meetings left to do the other one. So I'm not sure how they're pricing that one, if they only expect 2 more by the end of the year, but we shall see. Could mean that they're looking to slow, or they think they're going to slow down hikes coming into the end of the year. So this is the juggling we've got at the moment with central banks, how many more hikes they're going to do, over how long before the end of the year they've got to do them. I still maintain the short-term noise is about whether is the hike increments. The longer-term trends and moves we need to watch for is where we think, or where the market think rates are going to go, and where they're going to top out. For the Fed, I think the important thing tomorrow is not whether they go 50, 75 or 100. It's where the dots shift up to this neutral rate, or the high point that they think rates are going to go to. At the moment, it's high in the top estimates on the last dot plot from the FOMC is up in the 4.25 area. The market is already starting to price in 4.5%, 5% as the high point for Fed rates. So we need to see whether the Fed are going to confirm that and shift their potential terminal rate higher, and maybe even their neutral rate, or whether they're going to keep that fairly low. And that's what I think is going to move markets tomorrow. But anyway, we can talk about that tomorrow. Going to go over to the RBA. The minutes came out from there. In the minutes, they said they saw the potential for a slower pace of hikes as the rate gets higher. Not really any sort of change to their rhetoric. Their arguments or deliberations were over whether they go 25s or 50s, but they're going to continue to raise to combat inflation, which they think is going to peak the end of this year. Given their record of forecasting of the last few months, those of you might remember they were saying that they weren't going to raise rates until 2024 at the earliest. We take all their comments and forecasts with a very big pinch of salt. Back to the UK, we've got a bit of action coming out of the government. We've got a mini budget on Friday from Liz Truss's Chancellor, and there's a potential for a lot of tax cuts to be announced. There's a possibility of slashing business energy rates for firms and companies to get through this energy crisis. That's going to be a big slant to this mini budget, what they do to help businesses and the consumers with energy. For the pound, that's not really anything of note, because this isn't investing money. This isn't money to take people forward, to take the country forward, to grow GDP. This is just to help put a plaster on a festering wound, let's call it that. But movement on taxes in other areas could be seen in a good light by markets. You know, if they cut business tax, it potentially invites investment into the UK. But as always, we'll get the big headlines, this tax cut, that tax cut, you name it. And then we need to watch the small print, because there'll be plenty of people going over it and saying, right, you're giving all these tax cuts, how are you going to pay for it? Is it going to be increasing debt? Is it going to be breaking previous fiscal rules, if you like, or boundaries set? If that's the case, it's going to be seen negatively potentially by markets if the UK is going to get heavily into debt over that. But anyway, that's Friday, and we'll keep an eye on that, but that's upcoming. The only comments I've got is from Russia, going back to geopolitics. Again, this is some comments from the weekend and yesterday and whatnot. Putin came out and said that further strikes on Ukraine could be more serious. The stepping up there as the Ukraine offensive gained pace. He also said it's up to Ukraine to open one of the gas routes to Europe. So putting the blame game onto those guys. But a little comment he said, which did strike me, was that he said the switch to national currencies with China is slower than he'd hoped. Now, we know that he's been trying to get everyone to pay in rubles, He's been doing deals with other countries like China to get payments made in different currencies, yuan and ruble. But the fact he's saying it's going slower than hoped tends to think that, and as we saw last week, China isn't 100% backing Russia, at least publicly, in the Ukraine situation, to the point where they're taking a definitive side against the West. They're still doing a little bit of fence sitting there. So that comment that China is being a bit slow to up their game in paying for stuff in rubles or doing currency exchanges, as I say, falls into that category that perhaps they're still not properly on board or backing Russia in their moves. That's all I've got on the comment front. Any of you guys still, Kay, got anything on there you want to
add? Not really. I mean, I was surprised. Actually, not surprised with the Swedish krona move. I mean, that was ridiculous. Just a pure stop hunt and just went flying higher. But yeah, nothing more to add. It's all about the Fed tomorrow, really. I mean, there's lots of central banks tomorrow, but the Fed is center stage. And also, you have to look at yields, which are trying to break out. But obviously, ahead of tomorrow, I'm not paying too much attention to price action today. Let's put it that way. But in terms of data and stuff, I don't have anything else to add. No, we do get building permits, housing starts later today, and Canadian CPI, but nothing groundbreaking. Let's put it at that.
No, and just where have I done it? Have I lost it? I did have my other calendar up, but I've got a shot of it. Let's see if I can get it out quickly just to have a look at what's coming up in the rest of the week. As you say, building permits and housing starts today. Obviously, FOMC tomorrow, existing home sales, more housing data there. Not a lot into Thursday. Eurozone consumer confidence. That's a funny number. That number has only ever been positive, I think, 4 times in its entire history. So it's always been a negative number. Moody old Europeans, which still probably bucks the trend for being a moody European.
Yeah.
But, on Friday, Steve, he's a different kettle of fish. On Friday, we get the start of the European PMIs, the flash numbers there, and CAD resales, as we said there. So maybe one to look out for in the US, the S&P Global PMI in the afternoon. The flash number there, particularly after we saw the Empire and Philly Fed showing some terrible numbers there, we could see that continue there. So that's the weekend anyway. So let's have a look at prices. I've not been doing an awful lot, obviously being off yesterday, so I'm really doing a bit of catch up. I've got a couple of positions on, more ones I'm happy to sit in. US 10s, I was keeping an eye on. They're forging new highs, ticking up and ticking up. So that needs to be kept an eye on as well, particularly into the US session. Still, what were the price action like yesterday? Anything definitive? I mean, it looks like dollar yen's doing a bit of treading water, just edging up a bit. But for yesterday's sort of US session, much going on? Anything of note?
It was a very quiet day. I mean, we saw initially the main move really was cryptos kind of dumping, and Bitcoin kind of flirted with those lows, didn't get there, and then there was a general risk on move near the in the afternoon. But really, given the day, I mean, that's what we said on the webinars as well. It's days like that you don't really give too much weight to price action. But yeah, initially it was risk off and then back to risk on, and now we're back to risk off, and I'm guessing later today is going to be back to risk on. I don't know.
Yeah,
it's chopped before tomorrow. It really is.
Yeah, I think that's the case. We're definitely in the Fed orbit. And the market isn't going to stray too far. And here we are once again pivoting around that parity level in euro dollar.
Yeah,
I'm
seeing after the BRICS Bank doing 100, there's more comments coming out from the hawks, not obviously from the Fed, but just from analysts and stuff, and they're going, yeah, the chance for 100 is strong tomorrow for the Fed. I seriously doubt that. The question is though, even if they do 75, what does the market do? You could get the dollar rallying on a 75, depending on what else they say. How they frame the move going forward. And Fed fund futures are now pricing terminal rate going close to 450. So, you know, it's and also yields on the verge of a breakout. So we could get a continuation of this dollar move higher. But as for the Fed doing 100, I think that's like a 5% chance. I think it's very low, and the market's pricing more like 25. But that's just my opinion, you know.
Yeah, and I'm wondering what happens if they don't go the 100. Is there some real disappointment going to come on that? Are we going to see yields dump and the dollar dump on if they only go 75? I mean, it's crazy to think the market could get disappointed when the central bank hikes 75 pips.
Yeah.
But if they do that, that's probably going to be my main opportunity I'm going to look for. If they only go 75 and the market gets disappointed, that's not going to change the path of the Fed. And that's potentially what I'm going to be looking to jump into. But even so, you know, as we've seen, we've come through Fed meetings, we've come through ECB meetings, and, you know, for everything that's gone on, the euro is still stuck in that really tight range. It can't go anywhere. So it's going to really need to take something, a big change to really kick the euro out, particularly. Dollar yen, different kettle of fish. You know, we know the well-worn range, 140, 150 up to these 145 area. We're bang in the middle of that. You know, where do we go? Can the Fed break this range? Can it break it and hold it? You know, if it's really hawkish, it needs to bust 145. If it breaks 145, can it hold it? You know, if we get a little spike up, you know, 40, 50 pips, maybe more, but come down straight after back under 145, I fear we're gonna sit in a range. Kay, what do you make of it? Just treading water at the moment?
Yeah, for the dollar yen, it's really, we need to take the combination of Fed and Bank of Japan, right? I don't think I will be doing much ahead of either of them. I think the Fed has the potential to put it on the extremes of the range, but I don't think that we are going to break extremes. Well, I mean, I would not expect extremes to be broken until the Bank of Japan. So it's going to be a very short night tomorrow and a very early morning the day after for me, because I really want to see what Bank of Japan is saying about things. There is a potential here for dollar yen to go and test the 147, 140. The combination of both is dollar positive. I personally don't think Fed will change much. The unemployment rate hasn't really, well, it's deteriorated somewhat, but then the participation rate was higher, so that's not going to play. The CPI came back a little, but then was higher than the market expected, so that is not going to change them. I don't think they will go for 100, because that would be a bit of a shock to the system. Because as well, and I keep repeating it, we can't forget that this month quantitative tightening is doubling as well. So that has already a tightening effect of financial conditions, and yields can go where they want, or maybe it's a part of the yields going where they are now. But it's we can't forget it. So I mean, 75 is going to be more than enough for the Fed, in my opinion. And then we'll see what the plots are saying, what Powell will say on the meeting, and we'll see then, right? But yeah, for dollar yen, I think we need to look at a combination of both. Yeah,
and thanks, Gavin, for that link from who we've now called Timmy Leaks, hashtag Timmy Leaks. He's out of the brief. We've been waiting for that to see if there's going to be a comment on the Fed doing 100. This guy, Nick Timiraos, he's said to have the ear of the Fed, or have a bit of an insider knowledge, a bit like John Hildreth used to with Bernanke. So he's out with a piece saying that 75 pip is expected, and nothing really there are about a bigger hike, except that some people might think it's coming. So that's something we've been waiting for him to see. He pretty much touted the same thing last week, but that was after we got this. That was before we got this the CPI data that kicked this 100 BP hike business into gear. So this is sort of maybe a bit of a confirmation they're only going to go 75. And given that the market hasn't really done anything with that headline, let's have a look at yields quickly. No, not a lot going on there. So it looks like the market is really penciling 75s more than 100 at the moment. So that's where we're leaning at. But thanks for that, Gavin, for popping that one up there. Kay, do you want to have a look at a couple of pairs on your?
Yeah, I want to do it really quickly today, and perhaps leave the since you've already done part of the main ones. Let me go over to a couple of things. First of all, you guys see my screen, right? I suppose.
Yeah.
Yes.
Those yields, I mean, if you look at the yields are really flying, but then they are not going on their own. The dollar yields are not going on their own. And that's why we are stuck in this euro, the euro really is now stuck at around parity because the European yields are flying at the same rate of the dollar yields. We can argue that the dollar yields are the main driver, but I would also argue that some of those European yields flying are also due to von der Leyen's spending plans for European energy and stuff. But if you look at the Germany, the 10-year, the 30-year, they're going at the same rate as the dollar yields really. So, and if you then look at the differentials, they've corrected from their absolute 2021. Then we went like this is. If you look for the euro-dollar move explanation, this is it, right? From 2021 into 2022. And then since they bottomed and we are starting to correct, and we may be here in a bit of a range, those differentials, and look at where euro-dollar is. It's trading around parity really in that range. So if you want to trade dollars, just perhaps look at something else as well than rather the euro dollar, because if you look at the UK gilts, they're also ramping higher, 3.25% now. Canadian maybe a little less, and that's why the Canada had the chance to go higher as well. So yeah, keep an eye on those yields going into those central bank meetings. We could see a big change coming out of those meetings, although we don't have ECB, of course. This week, just for the little story, the Japanese auction, 10-year auction failed today. So the market is really not wanting to play Bank of Japan's game at 0.25%. They are really waiting for the Bank of Japan to see if they are going to change anything to what they are going to say. Quick look at some other stuff. Today I'm going to take you. Why not? Let's do well. Euro yen for one. I've been talking about this in the chat. This 142.3560 is starting to be a bit of a level in the euro yen. We had several tries to go. Failures here, and then it's starting to be bid here. So beyond the Bank of Japan meeting, I'd say keep a close eye on what's happening if ever we get close to this 142.3060 zone. Let's put it that way. On the other side, I've been playing with very success. The Norwegian kroner of late, especially when the oils were starting to come off, when there was a little less pressure on the European gas prices as well. The Norwegian kroner came under threat also because of the Norges Bank, as we know, is selling Norwegian kroner every day. It's not a huge amount. It's about 350 million euros worth every day, and it's not only versus euro, of course, it's versus dollar and everything. But anyway, they are selling Norwegian kroner, and when oil and gas is coming off, Norwegian kroner comes under a bit of threat. So watch this. We've had a bit of a try yesterday in this zone, sorry, towards the 10.32 and euro NOK. I think it may be of some importance. We're trading around 10.27. We cooled off yesterday as well as the Brent rebounded. We had a pretty solid move on the oils yesterday. And then as the Brent rebounded, dollar Norway, euro Norway came back down. But we are potentially here looking at this 1032-ish zone for post Norges Bank. If we start to go back below 1018, 1011 as well here, this zone is going to be rather important, I think, for a hold come the Norges Bank. Dollar Norway, it's broken up in my opinion. For as long as we hold above 1012, 1014 right now in the more medium term, I think this has a potential to move higher. And we are already holding the shorter term line, which has been created just this month. And we've already had 3 attempts to get back onto it, and it's holding for now. This dollar Norway 1018s right now is the first support zone. But if you look at a bit larger picture, we're in this kind of, it's a bit, I know my charts are a bit spaghetti. I think in my former life I must have been Italian. So if we ever manage to get above 1035 again post FOMC and Norges Bank, why not go and have a little retest of this 61.8 around 1060? So fail under 10, 12 after the central banks is one thing, or if it holds here and if we start to break above 1035, I think it's possible if that we do have a look at those 1060s. It's just possible. The rest we have, sorry, we have SARB. It's perky. Dollar rand is perky. There's no other word for that. It's bit, and we've broken through this 1750s zone that I've been talking about a couple of times, and this was a pretty serious trend line in my opinion, and it's broken above. So post SARB and FOMC, this is the one I would be looking at for a first measurement of strength or failure on the dollar rand. We are currently trading quite a bit higher, around 1772, but it's a daily. It's an emerging market currency. A lot can happen in there in a very short time span. So be careful for this 1750 zone on the dollar rand. If it continues, not a lot to see before 18s. And then, yeah, I wanted to have a look on those oils. Because yesterday there was it illiquidity? Was it, I don't know, OPEC related? I'm not even sure what the real driver was for this dump on the oils yesterday. But anyway, we came to test this support line, even broken a little bit below, but there's still some elasticity in those oils. As we've seen, the rebound has been quite strong. So I think for now, we are a bit in the middle of the range around this 85. Yeah, that's exactly where we are, around this 85 zone. So if ever we start to get back, I think this one has been run over a little bit too much. So we are in a bit of a descending wedge, but I wouldn't call it done until we really get closes and stay below this 85 for a prolonged period of time, and then especially break below what I would call 80 right now. Brent was also a serious mover yesterday, but we did hold the second support line here. This one.
I think we've got the October expiry coming in today. I think
Yeah.
Mark, chat rooms that might have something to do with the price rollover potentially. If you're looking at continuation,
Yesterday's
market.
move.
Maybe, yeah.
Yesterday's
I'm just putting it out of the air.
Yeah.
I read someone in our room saying it's the expiry.
Yeah, it's all possible, but we have to. If you look at the price action, I think for Brent is going to be very important. 86.5, 88. If that 86.5 starts to go, and then we could trade it a lot lower. But for the time being, I'd say relatively neutral. Yeah, it's all happening around this 91 right here and now. So there is a bit of room on the top side. But for the time being, I'd watch this support around here. Really, that's about everything I wanted to show today. I think big days tomorrow to come. Oh no, I wanted to show just a couple of euro crosses. Euro Kiwi, we are nearly back to the July high here. It's trading around 169.40 right now. The Kiwis, yeah, I wanted to show the Kiwi as well. So this is Euro Kiwi. This is what I was talking about already a couple of times. Since those euro yields are flying higher in tandem with the dollar yields, the rest, the euro crosses are all relatively bid, we must say, and it filters through here in this Euro Kiwi as well. So if this confirms through 170, we could be in for a bit of a flyer, but it's a relatively important level here, 169.70, 169.80, but call it 170 coming up. And then we have similar one on the Euro Aussie. That's been trying a couple of times, this 149.70, which is a 61.8 of the whole move lower that we've seen from July into the end of August. So keep a close eye on this 149.70. And then lastly, Kiwi dollar. Kiwi dollar. This is pretty big level here. 59 the figure. We're on it. Trend line coming in just around there. Call it 58.90. It's prior lows as well. If that starts to give way, the Kiwi may be in for more trouble. But always respect the support until it's broken, of course. And with that, back over to you.
Thank you very much, mate. Right, just a quick one. I want to bring Still back in if he's still about.
No, I'm not. Leave a
the
message after the tone. Beep. Go on.
I should have that permanently on my screen. Yeah, what about this gold, mate? Holding below this 1675.80 area, the big break point. So
yes.
Short, I assume you're still holding, and I'm short on the break. Further downside, if we're seeing this level hold.
Yeah, I still have half the short, and I'm holding with a stop at break even, which is 1687. Now the question is, I actually think gold is still behaving quite well. Sadly for my short, because we have yields rising, dollar rising, risk off, and it's still not managing to really convincingly. I mean, it's sticking below the level, but it's really pretty close to it. So, and before tomorrow, I'm not doing anything. I still have my short with a stop there, but I have to say, the more we hang around these levels, and obviously, unless the Fed is hawkish in any major way, I think the possibilities are rising that this might be a false breakdown. So I'm just looking at it still, and I really thought it would have been quite a bit lower. I thought 1635 was almost a given once we broke, but we're still not managing to get there. Maybe the market's waiting for tomorrow. I don't know, but that's just my view.
So for those who might be trading gold as well, if you're short, what do you want from the Fed tomorrow?
Well, if you're short, you want the Fed to either do 100 or you want them to do 75 and basically not diverge at all from their past rhetoric and, the what they've told us so far. Yeah. So that's what you want, really.
Yeah,
which is likely. You know, it's not. I think it's the most likely scenario that they do 75 and they just stick with it.
Yeah.
So,
and conversely, obviously, the risk belongs is obviously if that happens, then we see further downside. But you want the opposite of that if you're looking to long gold. But technically, that level is proven its worth at the moment. It's holding below, but as Stel says, it's not pushing on. And when you get a break of a big level like that, you'd expect a decent amount of follow through. It went 25-30 bucks, which is decent in gold standard.
I think if you want to be long, it's very easy. You have to break back above 1680, close on a daily or even on a weekly if possible, and that for me is a bullish sign. You probably want to go along there, even if you miss the first few bucks. I think there's more to this move, but we haven't done that.
Yeah, exactly. So while some of us are short here, we know our pain level and where we're potentially wrong if it moves above. And technically, that's all you do with trading. You pick your numbers and you trade them accordingly. Right, so on that note, I'm going to call it a day there. Lots to do today, lots more to happen the rest of this week. So you lot can disappear into the ether and get your thinking caps on. If you do want to come and join us in the trading room on the Forex Analytics platform, you can do so. I'll put the link in there. It's going to be a busy week for us getting our chess pieces ready for tomorrow's FOMC and the rest of the central banks to come. We'll have a lot of analysis always goes in at these times of the month. So if you want to come along, don't forget to use the FFL 20 discount there, which will get you a 20% discount off your subscription as long as you subscribe. Prices are going up into the end of September. So if you want to lock us in for a cheap price, then use the code there, get on the link there, and come and join us. And until tomorrow, thank you very much to Stel and Kay as always. And we shall see you bright and breezy tomorrow.
Take care, everybody. Thanks, Ryan.
Have a good day.
Cheers, guys.
Thanks, Ryan.